Yeah, I thought it was a very interesting day because the fear, in my opinion, out of this Fed meeting was that we were going to get a very hawkish tone to the Fed. They were going to be focusing on the fact that University of Michigan inflation expectations were much higher in the short term. They were higher in the 5 to 10 year as well. And so I think there was a concern that we were going to see a more hawkish tone come out. But that's not really what we got. You still have the Fed saying, look, we'll probably have 2 rate cuts. You have Powell talking about how they might look through a temporary jump in prices because of tariffs. And, he was actually asked the question, look, we said temporary before during COVID,
Hmm.
are we coming back to this again? But I think the market took from it that they are favoring cuts coming later this year. The market took a little bit of a breath with that, and that's why we had the rally. And it's why we saw yields come down about 10 basis points on the short end and even about 6, 7 basis points on the 10 year.
All right, so you have perfectly set up the soundbite from, I want to say Bernanke because I covered the Bernanke Fed, but the Powell Fed, where he was asked that question. There was this back and forth about sentiment data and hard data regarding inflation. And then he was asked the question about, is it transitory, and what we experienced during COVID, as you pointed out. And here's how he responded as to what's going to happen with inflation, especially with the potential for tariffs to hit. Here's what he said.
It's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment.
And so when he talked further, he talked about the Fed has to figure out how to separate tariff inflation from non-tariff inflation. The takeaway I had, and I am no expert, that's why you're here, what I heard was that they're not really concerned about tariffs and the current economic policy having a negative impact on the overall U.S. economy. Therefore, no need to raise interest rates, and why we got 9 of the dot plot voters saying let's have 2 cuts.
Yeah, if we dissect that, there's some truth to what he's saying in terms of the tariff itself would probably be a one-time jump in prices. So they want to look through that. I get that component. The issue that they have to be careful of, just like they saw in COVID, maybe it's not the tariff component, but it's the secondary results from that. If you get a fiscal policy that then becomes inflationary, if you get money coming to individuals, if you kind of stoke those flames of demand from people because you're trying to do things like cut taxes, do things that will help buffer the jump in tariffs, then you have an issue. And that's exactly what happened during COVID. So I don't think they can completely ignore tariffs. They have to look at what the whole picture would look like. April 2nd, Adam, is going to be a key date. It's one of the reasons that I say I'm not sure that we're at a tradable low, the quote that you used in the very beginning. If we see this current administration on April 2nd say, you know what, it's not just going to be reciprocal tariffs, we've got a whole nother plan laid out here, then I think we see the markets go lower and Powell will have to reconsider his comments.
All right, so what I'm hearing you saying, again, not an expert here, is buying opportunity is still off into the future because we're not at the lows. And in fact, the Dow was up at one point today over 500 points, but then we saw a sell-off. Not a sell-off, but we declined going into the close. So explain to me what was happening, and does this set us up for a continued sell? I haven't looked at where futures are going to be, but tomorrow when we open, are people going to be taking the profit of today off the table to line up for what you're saying after April 2nd?
I think you might see some people doing exactly that. When we had the most recent lows back on Thursday of last week, we sat around on our investment committee, we sat around the table and said we wouldn't be surprised to see a little bit of a bounce here, right? A little bit of optimism, people taking some things off the table, finding some things that maybe are a little bit cheap, but still in an uptrend, right? You don't just go in and buy anything. You really have to do your homework, look at certain names and add a little bit to your portfolio, but wait to go all in for a bigger pullback. And I think you're seeing some of that rotation from investors saying, let me take a little bow on some of these names while they're up today, take that profit off the table and then be ready when we see a larger pullback. A 10% pullback is not something that we should all be frightened of. I mean, we typically have that once a year anyway, and so we were kind of due for it. But it's the uncertainty around all the policies, whether it's fiscal, monetary, trade, regulatory. It's all the unknowns around that I think could drive us to a lower low.
Well, it was this quote, and I'm going to pull up the Fed statement where they said uncertainty around the economic outlook has increased. So you hit that nail on the head. But let me ask you this, and if we could, I'm not going to ask you to say yay or nay on Tesla, but if we can pull up Tesla today, this stock, and I was talking with friends this morning about this, year to date, the stock is down, I think, about 42%. But the last the last 52 weeks, it's up 35%. And there are people who love Tesla, there are people who hate Tesla. But it's one of those stocks that had been driving the S&P 500 higher, as was Nvidia. So when I look at what's going on with Tesla, what would you say to a client who's calling you up today and saying, hey, Tesla's on its way back up, I want to buy. How do you, those of us who get excited, how do you put us into the world of reality?
Well, whether it's Tesla or whether it's any other stock, and you could probably put most of the Mag 7 stocks in this scenario, what we would say is let's look at the fundamentals. Have the fundamentals changed in this stock? Have the fundamentals moved to a point where we would either want to sell or we would want to go in and buy? We don't want to trade off headlines. That's where you get that whipsaw. That's where people try to chase the market and say, oh, the momentum trade is there, the animal spirits are there. And then we see those pull back, and it all comes back to fundamentals. What does CapEx look like for Tesla? What does competition look like for them? With, tariffs on Chinese cars coming in, are they still going to be cheaper than Teslas? Are people going to go to those? You have to get down to some of the fundamental elements and see if it still fits in your portfolio. Do not trade off headlines.
So here was the other part of that discussion about Tesla today, because my brother had 2 Teslas. He loved the cars. He doesn't have them anymore. But Tesla's forward PE is 61. And I read an article today that pointed out the value of the company is something like $745 billion. But net income last year was roughly, $7.5 billion. That to me said, as much as I might love Tesla, that says to me, this is a very expensive stock, and I must be smoking something if I think I'm going to be able to sell it to somebody with that kind of, metric under it.
Right. In an environment where you're not exactly sure what those forward earnings are going to look like, because there are quite a few headwinds the company's facing, I would much rather go into a sector where I'm paying maybe 14, 15 times in healthcare, or even 10, 12 times in some financial names where those names are in solid uptrends. That would be a place that I would rather go to than paying 60 times in an area where I still think there's a lot of uncertainty to come.
I want to remind the people who are watching on X, on LinkedIn, on Facebook, on YouTube, and on Rumble that you can ask Victoria questions. We're going to bring our next guest in soon. You're going to be able to ask both of them questions you want. If you have questions about markets or not about timing a market, that's what I'd like to do, but we can't. But the questions that all of us are thinking, because these are the people who live this day in and day out and have done it successfully for several years. I want to ask you, Victoria, right now, what are perhaps the top 1-2 questions you're getting right now from clients?
Yeah, so a lot of our clients are asking, do they need to sell out of a lot of things and just sit in cash and wait for that lower low that we talked about a minute ago to go back into the market? Obviously, when you just talked about timing the market, we don't want to be chasing the market. So we can do some rotations within the market to help them depending on their risk tolerance. But you don't want to just go to cash and sit and wait. That's usually a fool's errand. And we also get asked about specific names, these Mag 7 names, and what we think about them and the longer term viability of those names within a portfolio. So those are the top right now. Once we start doing our quarter end meetings, I have a feeling we'll get a lot more questions around tariffs and what we expect from there.
And before we take our first break, I want to ask you, because your expertise is in fixed income. And I am somebody who does position some of the portfolio for our household with fixed income.
I'm so glad to hear that.
Yeah. Oh, yeah. It's well, you're going to hear that I'm probably overly conservative and have been for far too many years. But when I'm watching yields go up and then today yields dropping, that's where I get kind of what's going to happen here, because if you're laddering different treasuries, and that's when I'm calling our folks and saying, what do we do here? And they say, don't worry about it, and we'll call you in 6 months when this one matures. What would you say to people like me, paying attention to what's happening with yields and what we can surmise from this Fed statement today about where those might be heading?
Yeah, so I think if we look near term, we think yields will probably go lower before we see them move much higher. And we've probably hit the high in yields so far this year, with the 10-year hit a 480 earlier this year. That's probably going to be the high. And so I would try to take, based on people's risk tolerance, we always want to say, look at some of the shorter term part of the yield curve and lock that in, but you don't put everything there, because like you said, when it matures, you don't know where yields are going to be. So barbell that, meaning take some money and put it on the longer end of the curve as well, and lock in some of these 4.5% rates you can get on the long end for a few extra years, and just accept that cash flow coming in that can be a good buffer for equity volatility.